Good morning, everybody. Welcome to another daily market report brought to you by Mike Bjork. Today is Tuesday, it's September 10th. We do got a rather quiet day today. We got just a couple items here on the economic calendar. We'll start off with the NFIB Small Business Index. This is an index that kind of gauges the confidence level on small businesses, and the previous reporting in July was at 104.7. It did dip a little bit down to 103.1. These are still pretty good numbers. This is the lowest we've been since March, back when the whole China and U.S. kind of started struggling a little bit. And if you recall, we started getting that again last month in August. So you may see a little bit of an increase while the tensions have seemed to have eased between the U.S. and China. You may see some more optimism for September's numbers here. Last but not least, we got the job openings to remain at 7.2 million. So we still got plenty of jobs out there. The biggest thing when we see the NFIB small business is they're trying to retain their employees. That's why we're seeing income increasing so they can retain those employees because they're not finding enough qualified borrowers or qualified uh, employees to come in, and that's what their biggest complaint in their survey shows. So let's jump ahead here to the headline news. Stocks are down today. There's no real big news. They're just kind of looking overall. They're kind of looking at the China. There's figuring that there's no tensions as of yet, less tension. So kind of no news is good news, so to speak. ECB is coming out with their meeting on Thursday, and that is again. There was a little bit of pushback on from officials regards to some of the expectations. There are some pretty high expectations about further rate cuts, which brings them into further negative interest rate territory, as well as maybe bond purchasing program getting restarted again over there. So we'll kind of have to wait and see. We'll see the announcement on Thursday, but that may sour it a little bit with the investors, especially the mortgage back or the bond buying program. Let's see how this affected the bond market. Bond market is down. We're down about 9 basis points. We are further down as much as like 17 earlier. We did break below this level here, the 25-day moving average. So our next floor of support will be the 50-day moving average here. And then if we break below that, we got, as you can see, a pretty big drop, which is about another 20 basis points. So we're hoping we can stay above this, but again, we're kind of neutral territory. Stochastic shows us in neutral territory. We're not too close from any more crossovers to reverse that trend. But again, just to kind of illustrate where we're at currently. So we're down about 9 basis points. Some lenders may price in for a little worse pricing depending on where they came in this morning and also yesterday. So we had a price change and it worsened. We end up closing about 30 basis points. Uh, a negative 30 basis points. So if they didn't do the negative pricing yesterday, they probably wrapped it in today with further reduction. And here's a US 10-year. It broke above its 25-day moving average and is rising up. We're up to about 1.6, rounded up to 1.67 right now. So we're back into that range again. All right, so that's pretty much a wrap for the day. I hope you guys have a great rest of your day. But rates from yesterday morning, rates are worse than what we saw yesterday morning. All right. Again, have a great day. We'll look forward to you guys tomorrow. And thanks for watching. Bye-bye.